All right, welcome to OK Computer. I'm Dan Nathan, joined by Gene Munster, great friend of the pod, managing partner at Deepwater Asset Management. Gene, welcome back.
Hey, Dan.
All right, we got a lot to cover today. We want to preview Nvidia's earnings, which will be Wednesday after the close. We also want to talk a little bit about all that news in generative AI that came out last week, first from OpenAI and that product announcement, and then from Google I/O and what that means for Apple. It seems to be a little bit of a bake-off. I also talk about this with Deirdra Bosa. So after my conversation with Gene, she is the host of CNBC's Tech Check, and she was at both events reporting and did a lot of great work, and she and I cover the space and some of the news that went on there. But first, Gene, a little housekeeping. You're on my pod right now. You have your own pod. What is your own pod called that you drop? Is it twice a week or once a week?
It's Friday mornings, and it's Deep Tech 315. All you need to know, the three most important things in tech in 15 minutes or less.
All right, that's awesome. And you do that with one of your partners over there. I've been listening to it. It's great. Go find it, people, in your favorite podcast store and follow Gene because it's a great listen. But, I just wanted to kind of drop another one, maybe that you can go follow. Or if you're listening to this, that means you're already listening to a podcast and you know how to go follow another one. The Risk Reversal Media team, we just launched the Market Matrix. It's dropping on Monday, May 20th this week. It's going to drop every Monday through Friday right after the market close. And here's the thing, Gene, which is really cool. People, the feedback we get, they like OK Computer. They like Market Call. They like On the Tape, but they're kind of sick of us. So what we did was we did a generative AI generated podcast under 10 minutes every day. If you go there, you're going to know what happened in the markets. You're going to know what happened in tech. You're going to know what happened in the economy, maybe a little politics. Really cool. We're using a lot of generative AI tools, a voice bot with an awesome name. So go check that out. It's MRKT Matrix, and it's in your favorite podcast store. How about that, Gene?
I love it.
All right.
You're embracing the future.
I know. Well, somebody's got to, right? And I know you have, and a lot of the work that you guys do, both on the public and the private side. So that's one of the reasons why we love having you. All right, let's get to this. Nvidia, after the close on Wednesday, the implied move in the options market, Gene, is about $85 or so, or about 9%. Last quarter, the stock gapped up, I want to say 5, 6, 7%, closed up on the day 15% or so. They couldn't get enough of it. It was making new all-time highs, continue to go higher. The stock has kind of been range bound over the last couple months. There was one big decline, I think about 15% or so, but the stock's up a little more than 90% on the year. Now, you and I have talked about this. The expectations for earnings and sales this current fiscal year are up about 90%, right? And margins are never better, right? I think in the mid to high 70s. And, they guided a little bit to a decel a little bit in the margins. They got some new product ramps going on. They probably have a little bit new competition. They probably have maybe some sort of plateauing out of certain demand or so. We know that they have a huge customer concentration. It's Microsoft, it's Google, it's Amazon, and it's Meta, about 40% or so. And they're coming up against some difficult comps, okay? That's how I'm going to sort of lay it out for you. So I'm curious to know what you're thinking about it. I know you own it personally, correct? But not in the Deepwater Fund.
It is not in the Deepwater Fund, and is not right now. And I had not owned it personally. So it was in Deepwater. It's no longer in there. We can kind of walk through that. But
okay.
You appropriately did the kind of mixed the whole stew around here in terms of all the factors. And I like to think about the pressure point that jumps out, like of those, what's the most important. And I think there's one related to the fundamentals of the business and one related to the stock. And just to focus on the fundamentals of the business, is it this transition? You mentioned product transition of one of the things in the mix right now on the quarter. And I think that is the biggest X factor here. This, of course, invokes the Osborne effect, or the potential for the Osborne effect. That, of course, is when a new product has been announced, not yet available, and you'll see slowing orders of the existing product. So in the case of Nvidia, the existing product is like the H200 chip. The new products are going to be the B100, the B200, also this Blackwell platform that's kind of bringing those two together. Those new products, the Blackwell series, isn't going to be out likely until the fall. And so when you announce a next generation chip that's twice as good as your current flagship chip, that can create some pain in the near term. And I think that whether it's the April quarter, the July quarter, even the October quarter, we could see something kind of funky go on here with Nvidia because of that basically pause effect going into it. There's been rumors, which I believe is that Nvidia is going back to some of its biggest customers. These are the big tech companies, and saying, if you are pausing or canceling orders of our current flagship product in anticipation of the new product, well, we're not going to let you do that. Or if you do that, you're going to go to the back of the line when the new chips come out. And so they're playing hardball with our customers. And I think that that speaks to what's at risk here. And I'm kind of bracing for something kind of funky. It might not happen tonight. It may happen 3 months from now. But product transition under this big of a microscope is likely to create a near term hiccup.
Yeah, and you know what's interesting about that is that it's not just that customer concentration, right, among those 4 or 5 customers that are nearly half, if you will, of their revenues, historically for these products. It's also like, and you and I've talked about this. They've been making huge VC investments in the private, space. And I don't know about you, but for every success story, and Deirdre and I talk about this a little bit in the second half of this pod, there's probably a dozen names that are really struggling. They've raised a lot of capital. They've spent a lot of money on GPUs and, building out infrastructure and supercomputers and data centers and all this sort of stuff. And they're running out of cash because there's no monetization of a lot of these products. And so there's a lot of similarities, I think, to the tech build in the late 90s into the dot-com crash. And, there was a great thread, I guess it's just a long tweet, by Dan Niles over at Satori Fund, and a friend of mine, friend of yours. And he had a front row seat, as you did, in the late 90s. He was on the sell side then, covering a lot of big, tech names and telco names and the like. And it's a really good tweet about what he expects into the print, and really drawing some comparisons of some stuff that he saw. He's optimistic. I mean, he starts it out by saying, I expect a large beat and raise when Nvidia reports, on Wednesday, given more supply availability from Taiwan Semiconductor. But then he gives a whole host of other kind of reasons and discusses the landscape. We'll put that in the show notes. So curious to you that if they are able to put up a big beat and raise, you think it's going to be one of the last in this kind of cycle or during this product transition, because to see a reacceleration against those really tough comps, this next Blackwell platform is going to have to be as dramatic of a computing shift as what we saw in the H100 series. Is that fair, Gene?
It's fair. I think the reacceleration is, in my view, it's off the table. They're going to grow around 85% this year. Next year, the street's looking for around 30%. This is for calendar 25, around 30% growth. So I don't see any reacceleration. I do believe that there is upside. I think that there's a high probability that we're going to see upside to calendar 25 revenue and earnings estimates, because I think this Blackwell chip is going to be a success. So we're going to really start to see the benefits of that kind of starting in the January quarter of next year. And so the way I put the pieces together is, I've got some concern about the Osborne effect over the next few quarters, but ultimately I'm still on the page that what's going on in AI is happening at an accelerating pace, and that's a pretty high bar. I still believe that the substance of the transition of AI will exceed the hype, which is a pretty bold statement. And so I don't know how the factors in there are going to be companies, like you said, that have been buying some of these chips are going to get washed out. Undoubtedly, that's going to happen. But I think that Nvidia, even though we don't own the stock, this is one that really tests our kind of conviction. If we truly believe that AI is going to be this transformative, we believe that Nvidia's got a competitive advantage. They're probably going to grow faster in 2025 than people think, and the valuation still is pretty reasonable if you think that they can grow better than 30% in 25.
Yeah, no, and again, I see what you see, and a lot of folks are saying, well, 37 times this year, and this is, I'm just looking at fiscal for a second, and then 31 or so next. Even if on those we have a 25 expected percent earnings and sales growth, it seems kind of cheap. And Dan in his Twitter thread, points out that right now it's trading on the out year at a discount to its 5-year average PE or so. But again, the one thing I would just say, Gene, about this, it's a very concentrated trade, right? So there's been very few pure play ways
Indeed.
in the generative AI space. And so it's interesting when the S&P and the NASDAQ sold off, about 5-6% or so from the highs in March. Nvidia was down 20% at its lows, right? Microsoft was down 11% or so. That's another one that even though it's got a $3 trillion market cap, people think it should dramatically benefit or so. It's also interesting that Microsoft has really had a lot of sideways action. The S&P has been making new highs for the last week or so, right, on a daily basis. Microsoft's yet to make a new high, right? So when I think about this, Alphabet, for instance, or Google, is broken out to a new high and makes new highs every day over the last week and a half or so. And maybe that has something to do with a different tone in Google I/O, but it had really been a laggard. Amazon, perceived to be a laggard, has not made a new 52-week high. So there seems to be more dispersion in this trade. And if you go to the leader, you look at an Nvidia that's gained $1 trillion in market cap this year alone, I say to myself, everything has to be not only pristine, it has to be better than the whisper, right? Like, you know what I mean? So on the report and the guidance. So talk to me a little bit of how you're thinking about that, because again, Dan Niles mentioned in his tweet, he thinks it, on a big beat and raise, he could see moderate upside, maybe like 5%. There's nothing moderate about the response to anything that this company's doing in the markets. And I think you made a really good point, when we started this out. You have to differentiate between what the company's doing, the quality of the products, you know what I mean, the stickiness that they have with their customers, and what the stock might do, because at some point they're likely to diverge. They've been in lockstep for the last year and a half. At some point, what the company's doing won't be good enough for those expecting the sort of growth rates that they've had over the last 6 quarters.
So to say that NVIDIA is under a microscope every quarter that they're reporting is an understatement. And the tendency, I think, of the market, if there is anything little that's kind of wrong, it's that this has had a huge move, and the AI trade isn't going to be as strong as I think it's going to be. I think that is probably the knee-jerk reaction. And again, we're talking about a major product shift here, going to Blackwell in the midst of still what are ramping sales. It's supposed to be up 85%. So I actually think that all that matters related to the guidance for the July quarter is going to be how people think about that for 2025. And if Jensen can get on there and reiterate his 4 points of why he still thinks we're in the earliest stage of AI, which he's enumerated before. This goes through from the training piece to industrial AI to sovereign AI and countries using this. If he can convince investors that this is going to continue, then I think that over time they look through it. So my sense, I'm a horrible trader, day of, day after. I'm not the guy to talk to, but I still have a view about what's going to happen. And my general sense is we're going to see something in the Osborne effect that's probably going to spook shares in the near term. But I think that eventually investors come back to this. And the reason why I think investors are going to come back is that what we saw last week from OpenAI was breathtaking in terms of how fast that they're moving. It was the first real-time live data demo of multimodal AI. And I think that when I see that, I piece together that we're just still scratching the surface, and I think NVIDIA is in a great place. And so I would recommend, besides checking out your new pod, please check out Deep Tech 315. Check out the OpenAI demo for GPT-4o. It's 26 minutes. It's the best spent time to understand what's going on in AI.
That's awesome. And let me ask you this. So then the next day was Google I/O, and a lot of folks thought, they rushed the kind of the product update. This is OpenAI a day before. What was your take? And we'll spend some more time, I'm sure, on Fast Money over the next couple of weeks, and hopefully you can come back right before WWDC. Again, it felt like these two companies are competing for, the eye of Apple from a licensing standpoint. A lot of folks think it's going to be OpenAI. I could make a whole host of good arguments why it should be Google if I'm Apple. But any thoughts really quickly, right on that little competition?
Something's going to happen. CFO Luca basically hinted to that on Apple's last earnings call when he said that they're going to be scaling with third parties. He's referring to OpenAI or Google. Keep in mind, Google's got a big relationship with Apple today, spends $12 to $15 billion a year for search placement. I think that kind of plays into this. Who's going to win it? It seems to be a coin toss at this point. From Apple's perspective, it really doesn't matter. I think actually they're going to get paid either way, because OpenAI doesn't have distribution, and Google has a lot of distribution. They still pay Apple for a lot of money for more distribution. So that's really Apple's secret sauce here for these two potential partners. My guess, most of the chips are kind of pushing that OpenAI is going to be the partner. I actually think it's probably Google just because they have a pre-existing relationship. And what they showed at their developer day was in concept just as good as OpenAI. It wasn't live demos; most of them were recorded, which says that it's just not quite fully baked. But I think that given the relationship that they have with Google, they'll continue down that path.
Yeah, and really quickly, Gene, on that front, does the drama over at OpenAI, some really high level people just left, and one in that sort of trust and safety group, and that was kind of at the core of why Sam Altman, was pushed out in November. Obviously, he came back. Is that the sort of thing? I mean, Apple's mantra is trust and safety, right, and security, and so and very different things that these folks are worried about when we get to AGI. What are some of the safeguards going to be? But I'm sure Apple is really thinking about all of that too, especially when they're choosing a third party.
They're definitely thinking about safety. I think that the changes more recently at OpenAI were kind of set in motion back in November of 23 when that team basically, Ilya started to push Sam out the door, and that kind of had this. I think this is just fallout from that. Now his lieutenants are following course, and so to me, it's more about it's not a step away from safety from OpenAI. It's more of just Sam doing some house cleaning for some of the adversaries he had back in November.
All right. Listen, Gene, we covered a lot of ground. I really appreciate you being here
Thank
with
you.
me today. Hopefully, we'll do it again really soon. I'm sure I'll see you on CNBC's Fast Money. That's Gene Munster. He is the managing
Can't wait.
partner at Deepwater Asset Management. Thanks. Stick around for my conversation with Deirdra Bosa of CNBC's Tech Check. Welcome back to OK Computer. I'm Dan Nathan, joined by Deirdra Bosa. She is the host of CNBC's Tech Check. Debo, welcome back to the pod.
Hey, it's been a minute. Happy to be here.
It has been. You've been on the Gen AI beat. It looks like you've been all over the place between the product announcement, I guess the spring update, as they're calling it at OpenAI. That might have been pushed up a little bit in front of Google's I/O. I know that you were up there. I know you're tracking all the stuff going on with Amazon in the space. Some changes at AWS that seem to be very much in line with kind of how maybe the former CEO of the company and largest shareholder and founder, Jeff Bezos, is perceiving the progress that company is making in Gen AI. And we know how important, again, how AWS is to the rollout of that. And then really all eyes are on what's going to happen at WWDC. That would be Apple's Worldwide Developers Forum on June 10th. So a lot going on, and a lot of this stuff is kind of interrelated, I guess, the way that you and I are thinking about it a little bit. So I'm curious, there's a lot of drama too, and we'll get in company by company a little bit, but I guess the news late last week that one of the founders of OpenAI, a guy who led the ouster back in November, or he was one of the folks who led the ouster, Ilya Sutskever, that was leaving the company, and then also followed quickly by Jan Leike, who was also somebody who ran the Super Alignment Group. And this was something that I think a lot of folks, as it relates to, safety and trust and all those sorts of issues and how they're thinking about generative AI going forward once we get to a certain level. Those big departures, a lot of drama. Talk to me about that before we get to the products. What's your takeaway here?
In a way, it's a continuation of the drama from last November when Sam Altman was originally ousted and then reinstated as CEO just a few days later. So some of the people I talked to say that this isn't surprising at all. They wanted to get ChatGPT 4.0, that was their product announcement last week, out the door. And it's almost like 6 months exactly from all the drama of last November. So folks aren't that surprised that Ilya Sutskever is out. But I think as a whole, this is just as dramatic as it was, especially because we didn't get any answers then. And we're not getting any answers now. Sam Altman put out his post on X saying, so sad that Ilya's leaving. And Ilya didn't say much. He said it was a hard decision. But then you mentioned the other guy that's leaving, Jan Leike. Um, him and Ilya, the two people who are in charge of that safety team at OpenAI, who are looking at the long-term risks of AGI, who've always been at the forefront of this, they're leaving. And Jan Leike said more than Ilya did. What did he say? He said on X, over the past few years, safety culture and processes have taken a backseat to shiny products. To you and I, Dan, that cover Wall Street every day, it's not that surprising, but there's this mentality here in Silicon Valley that your work should be meaningful, that it should matter. And OpenAI was always a different kind of company, almost like Google was in the early days with its motto of don't be evil. You work there because there's this greater mission to protect humanity. And now that it's sort of fully fledged commercialization and monetization, Sam Altman has kind of won out against the people who were worried about the negative impact of artificial intelligence. It's changing, and that's going to have implications, I think, for its partners, for its investors, for its employees.
Yeah, and again, this was at the core of the reasons why Sam Altman faced that coup back in November. And it was interesting because, even after that, there was not well known what the reasons for were that, but obviously Microsoft, which is one of their big investors and obviously a huge proponent of the technology, it seemed like there was this kind of kumbaya moment in December into the new year about, okay, Sam Altman, good guy, taking this in the right direction, heard some of the voices, you know what I mean, that were like kind of, causing some of the uproar about the speed in which they were moving and how focused they were on some of these, big existential issues. So it seems like, to your point, 6 months later, this is once again at the fore when they're releasing products that at a speed in which I think a lot of technological folks are really, really impressed, especially with the improvements in performance and the like here. So again, it seems like this is something that we might start seeing at some of these other companies too, as their, other advancements in the speed in which they're doing it.
I would say we're already seeing that. And that's sort of this broader theme of the people who are really worried about AI's impact on humanity. They're kind of fading away a little bit. It's not just OpenAI, but Anthropic, right, which was created as a counter to OpenAI to really put responsibility at the forefront. There's not any indication that they're not doing that, but I did note last week that they hired a chief product officer who was a CRO at other companies, other tech companies. You've got Google moving a lot faster than it had. It was always supposed to balance boldness and responsibility, but it feels more bold these days too. A lot of investors benefit, which they have said that they've wanted to see. But you just do see sort of full speed ahead in the Gen AI world. And it feels like that discussion last November and those factions within OpenAI had faded away until now. And now that the drama is back and it's making headlines and there's people worried about it, I think that's going to could have some interesting implications. Dan, you mentioned Apple and WWDC, right? Everyone's anticipating some kind of announcement. Is Apple going to partner with OpenAI or Google or both? What is it going to look like? You've even seen Microsoft diversify a little bit from that huge $13 billion OpenAI investment. It's partnering with Mistral. It hired Mustafa Suleiman from Inflection. And I think that's perceived to be them hedging a little bit against the risk that seems to be rising at OpenAI.
Yeah, no doubt. And I want to hit that in a second here, but I'd love to kind of hear your take of Google I/O. I know that you were there on the ground. I know you had a lot of great conversations with a lot of folks there, both, in technology, but also some investors since there. You've been doing great reporting on CNBC. At least I've really enjoyed that. It's interesting. Google has had a moment here, if you go back and I just, I'm a little bit of a chart monkey here in the stock market. If you look at the gap that it had lower, remember in sympathy with Meta, where on that kind of Q1 print, the guidance that they gave that spending was going to be up a little bit and revenue was going to be down a little bit. And Meta at one point in the post market was down nearly 20%. I think it closed that day down, 15 or so percent. But Google really sold off on that. And then, just a couple days later, they put up a beat and raise. And since then, the stock has been off to the races, making new, all-time highs seemingly every day for the last 2 weeks. So there was definitely some expectation and excitement into Google I/O on the back of the guidance that they gave that, what for the most part had nothing to do with generative AI, right? I mean, they had a lot of good things to say about that, but you also just said something I think really important. One of the reasons why the stock, I think, was a laggard last year is that they were moving slower. They were not having the same success on the product releases. They didn't look nearly as whiz-bangy as anything that OpenAI was doing. And I don't think that, like, coming out of OpenAI or Google I/O, that people felt like they're really in the pole position by any means, but they're moving faster, I guess. Does that make some sense?
First of all, whiz bangy. I
Yeah,
have not heard that, and I'm definitely gonna be using that
fair
from now
enough.
on. That is
Yeah.
exactly it. That's exactly it. They didn't have the whiz bang that, like, Microsoft and OpenAI had, and I love your charts. I also went back and I looked at Google versus Microsoft since November of 2022 when ChatGPT was released, and actually they've been kind of in lockstep, and that goes to tell you how much ground Google has made up in these recent months. Um, I think the biggest takeaway for me from IO is that we are seeing a hungrier, more urgent Google, a CEO who's willing to realign the company, combine teams, fire employees if need be, in order to take advantage of this platform shift. And what they did with search, I mean, there was always a question overhanging Google for the last 18 months. Was it prepared to disrupt search to gain an edge in Gen AI? And they have this incredible distribution, right? Over a billion users across its products. They've got 90% market share in search. And what they did at IO, they said, listen, we're bringing what we were experimenting with, this thing called search generative experience. Now they're calling it AI overviews to all of our users. And they've rolled that out now to all US users. They're going to reach a billion people by the end of this year. So they are definitely flexing that distribution muscle. And we always talk about playing with Perplexity and GBT and Claude, et cetera, but we're like the minority. People are still using Google search. And those people that are using Google search are now going to be getting these generative AI overviews. So they're going to be introduced to this new way of searching before many of them have a chance to really use ChatGPT or some of the other ones, even Gemini, even Google's own generative AI answer machine. They're going to just experience it through search, which is probably like the biggest thing that they could have done at this point.
Yeah, I agree 100%. And I've noticed that over the last few weeks. Again, if I had been going to Perplexity first, right, to get a more textualized sort of response rather than a bunch of links, when I have been going to Google, I've been getting an experience that feels very much like a Perplexity, or if I was doing something, based on a Chat GPT interface. So to me, I think you're 100% right. And you think about this, I know that you talk about this all the time. I think they have 8 or 9 products that have over a billion users. They have 3 or 4 that have over 2 billion. And so if you just start kind of integrating this technology across those massive, user bases, it's going to become that sort of behavior we've all been accustomed to as it relates to Google. And so then they figure out other ways to monetize it, or at least at the very, least, at least at the very simplest fact, they just kind of defend their moat as it relates to search and search advertising.
Well, so I also sat down with the Google CEO, Sundar Pichai, last week, and I really questioned him on like how AI overviews change the business model. Because for consumers, it makes a lot of sense. But if you're an advertiser, publisher, merchant who's paying Google to have one of the top links on the website, and all of a sudden you're being pushed down by these generative AI overviews, you're not going to want to pay the same amount of money. Sundar Pichai said that that's why they've been doing this carefully, and he doesn't actually expect that to change all that much. And it didn't sound like they really prepared advertisers because they didn't think they needed to. And I'm curious how that will play out over the next weeks and months, and how Google's able to monetize in this new AI overview world of search. I think that that's still unclear, though Pichai sounded very optimistic and confident that it would be smooth.
Yeah, and this brings us to Apple, I guess. So there seems to be a little bit of a bake-off between OpenAI and Google, right, for that some sort of licensing deal. We don't know what it looks like. You and I have talked about this over the last, month or so, that, again, we know that Apple gets this very high margin revenue from Google, right, for that secure spot as far as search on iOS devices, specifically within Safari. So is there a deal lurking out there where it looks like Apple is paying Google for Gemini, right? And again, we know that this is going to be a very different looking deal than probably what Microsoft kind of secured with OpenAI a year and a half ago, and then continue to kind of lean into. But they also continue to diversify a bit, as you just mentioned. So, this one to me, I wonder if all the drama at OpenAI leads a company like Apple, where there's not usually a whole heck of a lot of drama, right? When you think about it, whether that kind of leads them to make a deeper partnership with Google. And again, we know that they compete as it relates to Android for global market share. They probably don't have a whole heck of a lot of competition in the US. And I just think about all these social companies that you and I think about. The ARPU, the average revenue per user here in the US, is so much higher than it is globally, right? In other places. And I think of the price point for, Apple's hardware here, doing the right deal as it relates to Gen AI, and whether it's cloud-based, whether it's on the device, whether it's a new upgraded set of services, it really is important for North America, right? So it's not like they're competing with Android globally, where we know that they just get less money out of those users. So thoughts there, if that makes some sense to you, that maybe Google, while they look like a dark horse here with Gemini, maybe it's the deal that makes the most sense long-term for Apple.
Yeah, and I asked Sundar Pichai about this as well, what it meant. He said we have ways of keeping our partnership and staying on the iPhone device. He wouldn't say, the status of any of those partnerships, especially in a Gen AI world, but he just seemed confident that they will always have a place. We talked also a few weeks ago, there was speculation that OpenAI might announce some kind of search engine. To me, that feels irrelevant now that Google has turned on AI overviews, or is turning it on for every single Google search almost. So it kind of makes that proposition a little less. And it also tells you that if the browser deal is still in place between Apple and Google, you're getting Gen AI just by searching. Anytime you search, you're getting that Gen AI overview. The interesting part, where I think it gets interesting, is when it comes to Siri. Siri has been seen, the voice assistant, as such a laggard in the voice assistant space. But with what we saw, what was new in Gen AI last week between the OpenAI ChatGPT 4.0 AI agent and Google's Project Astra AI agent, that makes Siri a really, really interesting player, because it's got that distribution on the iPhones. We know that Google's going to be bringing that to Android. They need something really good. And the difference between those AI agents and the chatbots that we've been playing around with for 18 months are the AI agents. They just go, a monumental step further. It's real time. You can converse. They can be your tutor. They can complete some tasks more autonomously. They can emote. They can reason. They can remember things. We still don't have that technology in our hands in a big way right now, but it's coming. Even Sundar Pichai said that he wants that available to the majority of US users within a year. That is a very quick shift that we're about to see, and I think Siri could play a really important part there.
Yeah, I guess the real question is whether they kind of rename Siri, because it's got such a negative connotation, across so many users. And again, Apple devices, they're shinier, they're whiz bangier, if you will. Then no, all right, that wasn't great. Then a lot of the plastic devices that we see, like the old Android sorts of things. But again, I think the experience, with Siri has not been something that's lived up to those expectations. So that's one area that a lot of folks, as we get into this kind of multimodal like AI world, you're going to need that voice assistant. And that was a huge focus, I know, of OpenAI and Google I/O last week. All right, before we get out of here, Dee, I'd love to get your take on some of the drama over at Amazon. It seems like there's some reporting that, Jeff Bezos is not particularly happy with the pace in which the company has been innovating. Again, we know that AWS is a core part of their generative AI strategy. You just mentioned Anthropic. They've been investing in Anthropic. They have been developing their own foundational models. There's a whole host of ways that they can benefit from users who just want to rent compute, rent models, all that sort of stuff. But they've made a big shakeup at AWS. And, when you think about Andy Jassy, I know this is a CEO that you've gotten to know over the years. He used to run AWS for a long time. And I'm thinking that was Adam Selipsky, was he the person who replaced Jazzy, and so that now they're making a replacement there at a time where the largest shareholder and founder and former CEO seems unhappy, if you will, of the pace of which they're growing their AI ambitions. What's the shakeout here in a way? And do you expect maybe to have a sort of Google moment? I look at, again, back to the chart, Amazon's back at its 5-year highs, back to the point in which, Bezos dropped the mic in 2021 and handed over the reins. That was the all-time high in the stock. And they haven't really had a moment where they've been able to demonstrate to investors how they're using generative AI, or what they're developing, or how they're making investments, and how that's going to kind of benefit shareholders.
I think there's really two angles to the Amazon story. One is the financials, which have just been improving by leaps and bounds over the last year or so. What we have seen is a far more profitable Amazon with great free cash flow, more discipline. And when you think that that comes on the back of these huge capital expenses of doubling their logistics unit, the margins have gotten better on the e-commerce side. Like on the financials, Amazon has really been improving. And I think that's great for investors. But to use your term, on the whiz bang side, which is generative AI, this story is kind of at odds to the other one. Is it's always felt like they have something to prove and felt like they're on the offensive. And for a Jeff Bezos whose philosophy is it always has to be day one, doesn't really matter if you're producing more cash than ever, if you're more profitable than ever. You gotta be at the forefront of the next innovation, the next platform shift, the most important one of our lifetimes, which is supposed to be generative AI. I think that Google has had a really hard time vocalizing its strategy. I saw this meme that, I always laugh when I think of. You've seen the meme where it's like, this is the new economy. Uber has no cars, Airbnb has no homes, and then fill in the blank. So I saw a meme that said, Uber has no cars, Airbnb has no homes, Amazon has no AI. And it made me laugh because that kind of is the perception. There's a lot of things they're talking about, a lot of partnerships, but people in the industry don't think that they seem to think they don't have a cohesive strategy and anything really that compelling. When you think about them versus a Google, which has not only built the large language models, but is incorporating it into their products, it's hard to point to that,
Yeah,
point to one.
and that's a great point. And the only thing I'll say about Amazon is that this is a company that has been recommending products to us for like 15 years in a way that we've just kind of taken for granted. You know what I mean? They've been investing billions of dollars in machine learning for a long time in the cloud infrastructure and the like. And those are the building blocks for actually instituting great generative AI going forward, right? So like I'm willing to give them the benefit of the doubt. And you just mentioned how they've really just turned on this profitability engine. A year ago, we were talking about how the North American retail business was basically not being valued at all in the market cap of this company. So I think about it this way. I think about, if they are able to integrate some of this technology that they've been investing in, whether it's Anthropic or the like here, and start to kind of get better performance, better productivity within their own company. That was the meta story. If you think about it over the last year, the investments that they made in the metaverse, right? And expanding, like a whole host of other capabilities was the thing that helped them serve better ads, charge bigger rates for it, and really have the performance that they've had. So I think about Amazon. I just saw a headline in Bloomberg saying that they're cutting 1% of their global customer service workforce. Well, if that has something to do with their ability to integrate generative AI for their own processes, then that is something that, should help margins, in my opinion. But again, we won't know that for a while. 1% of their workforce, I think they have 250,000 workers. I don't know what percentage of those are customer service, but again, who knows? These guys have been investing in robots and the factories and logistics and the like. If there's ever going to be a company where there's not a whole host of employees, human employees working, it's probably going to be this one in about 10 years. You think about the drones and all the other stuff they're working on. So again, Amazon's one. The way I was kind of optimistic about Alphabet/Google, for the better part of the last year, I'm optimistic that Amazon's also going to have that moment probably in the next year or so, play a little catch up. So all right, Dee, we covered a lot of ground. You did a lot of great reporting last week. I saw you all over the place interviewing CEOs.
Thank you.
And
So did
product
you.
guys.
I saw you on the TV also.
No, this is the fun stuff, because again, we don't know how it all shakes out. And, maybe we'll spend some time, with some of these companies in the private space that are not doing particularly well, because it seems like for every story that looks, like they're just growing, skipping, billions of dollars in valuation on every new round, there seems to be a dozen that are failing too. And I think that's going to be a big story in the back half of this year.
Absolutely. Well, I'm excited to cover it all with you.
All right, Debo, thanks so much. We'll see us very soon on the pod.
Thanks for having me.